Proud supporters of Africa this week. Engine, with us, you are number one.
Hello and welcome to this edition of Africa This Week, your wrap of what happened across the continent. I'm Mashudu Masuta. South Africa's newly formed Black Business Council has suspended its participation in Business Unity South Africa, or BUSA, but spokesperson Sandile Zungu said it had not withdrawn completely and still wanted to negotiate with BUSA.
When BUSA was formed in 2003, black business organizations collapsed the structure, which was their umbrella body. Even then, it was called Black Business Council because they trusted BUSA to really articulate all the agendas that they felt were pertinent.
Right.
Clearly, over the last 8 years, that hope has not materialized. So they've thought the best thing is to form that organization, which will be an umbrella body, which will give them character and strength to then go into BUSA from a position of strength.
This is not the first time that a black business organization expresses a lack of confidence in Business Unity SA. We know of the Black Management Forum and their withdrawal earlier on in the year. What are the problems at BUSA? Because effectively it's seen as the amalgam of a variety of groupings that represent corporate SA.
Well, absolutely. I think BUSA is a microcosm of what happens in society. You know, apartheid and its legacies are quite deep. So social dialogue in South Africa becomes quite strained, and naturally the fissure lines will be history versus the future. So BUSA is no exception. You know, the issues that black business believe in are issues of inclusivity. Whereas we believe, they may argue otherwise, but we believe that other people they just want to focus on growth of the economy without necessarily paying attention to issues of transformation. So that creates a lot of tension.
In what ways is BUSA not addressing the issue of transformation? And I'm going to say here, for the longest time, organizations like the Black Management Forum were part of BUSA. They were a constituent voice within BUSA. Why did they not ensure that transformation was critical to the agenda? To keep on creating an us against them, I think doesn't help the process any further.
No, it's a very complex issue. Take, for example, call it the governance structures, the structures within BUSA. You have a transformation policy committee, you've got economic policy committee, you've got social policy, and so on and so forth. All of those, they feed their work into the executive committee of BUSA, who then decide what goes to the agenda of the management committee called MENCO, who ultimately decide what goes to the agenda of the council, where all those organizations are represented. Transformation policy issues don't find expression ultimately where decisions get taken. They get sieved, they get sidelined because they're deemed to be not urgent and important. That's a typical South African story.
Many who are watching you right now would say, how does this help transformation, having a Black Business Council, having a Business Unity SA, having a BMF, having all these organizations? How does it ensure that we start moving into a democratic economy? Because in many ways, it almost reinforces the polarities of the society.
Well, let's not paper over the cracks that we've inherited from the past. You know, it just shows that the project that culminated in us voting in 1994 whilst it was good, exceptional, but at an economic level, it has not really delivered the goodies. So what we are basically saying is, it's a very simple equation. The strength of black business, which will now achieve through Black Business Council, will strengthen business as a whole. We are still determined to strengthen BUSA, by the way, we have not worked out. We'll be engaged with them because we believe that social dialogue, where business punch with a strong voice, is very helpful to South Africa.
We've run out of time, Sandile, but I want to establish one thing. How is it that the interests of black entrepreneurs and black companies are different to those of white companies? We're all faced with issues of skills deficits in South Africa. We're faced with a sluggish economy. All the macro factors affect business in the same way.
Well, I mean, but issues of inclusivity. In a nutshell, what we're saying is that this economic growth that we have seen over the last couple of years must not just benefit a few people. It must benefit the unemployed, it must benefit the youth, rural people, women, etc. And we perceive ourselves as black business, as the custodians of that thinking. And we want to make sure that it goes to the center of the agenda of organized business.
Don Huber, the portfolio manager for the Franklin Global Growth Fund, visited South Africa this week, and he spoke to us about investment in the prevailing economic climate.
Our focus is long-term. We're long-term investors. We own a concentrated portfolio of high conviction of roughly 40 companies, and they're growth companies that we think have sustainable business models and growth over the long term. So in a market like this, we stay focused on the companies, we stay focused on the opportunity. We own a mix of companies in a portfolio that we think over, in most market environments should do well, and certainly should do well over the long term.
I mean, if you're focusing purely on company fundamentals and sectoral issues, to what extent do these macro forces like volatile currencies, inflation, central banks being confused, to what extent does that inform your decisions?
Not to a tremendously meaningful extent. We really try to tune out a lot of the near-term noise and a lot of the near-term focus. Clearly, we are focused on the pace of economic recovery and are watching that. But we really aren't making a call on that. We own a group of companies that we think through a market cycle should perform well. These are companies, some that have cyclical exposure and will grow at a slower pace in a slower recovery. And some companies that have no cyclical exposure at all.
I mean, people look at somebody like Warren Buffett for all the good reasons, but they say what makes him stand out is that he is very meticulous about being a value investor. For you, when you say value, what does that mean?
Well, to us, value is a component of what we do. It's not the driving force of what we do. For us, as we look at value of the companies that we're buying, we want to make sure that the share price that we're paying for a company or the share price for a current company that we own is reasonable given the growth expectations that we see going forward.
Which sectors would those be? Because when people look at Africa, for instance, it's really a resource play. People always say it doesn't matter what global economies are doing, you're likely to get better returns if you're moving into commodities, for instance. So people tend to flood into those kinds of companies, telecoms as well. What's your approach?
Yeah, our approach is really fundamental bottom up. We're looking for the best growth opportunities we can find that meet our criteria, growth, quality, and valuation. And those can be across sectors. I agree there are resource opportunities around the world in a variety of different ways. We own several oil field services companies or energy services companies which we think offer attractive growth. We own a precious metals refining and product company as well.
When investors say to you, here's a suitcase of money that I have, I'm sure it's not quite as crude as a suitcase, build me a beautiful portfolio. How do you go about doing it?
Well, our view again is from a bottom-up stock selection basis. We're looking to buy 40 great companies and companies that we can own for a number of years. And so our analysts are doing a tremendous amount of in-depth research into the growth characteristics, cash flow generation, the sustainability of the business model, the competitive position, the quality of management, shareholder returns, and valuation.
I mean, obviously a lot of even novice investors are looking at stock markets and saying, I want to ensure that my investments either track the index or outperform. And when we're seeing these very volatile movements, it's a very difficult call to make.
It is a difficult call to make, and I think, particularly for investors who are looking to market time, which I think is unfortunately comes part and parcel with the volatility that we're seeing, and investors are worried about whether now's the right time to be investing or whether they should be, as you mentioned, going into treasuries. Our view, again, is over the long term, we own a great portfolio of businesses that over the long term and through the years should perform very well.
Contrary to popular perception, cybercrime has gone beyond mere disruption. It has elevated to the realm of organized crime. As more African countries and companies become connected, cybercriminals are creating around 60,000 malicious sites a week to ensnare unsuspecting computer users. Buntu Williams spoke to Peter Baxter, a global executive at AVG, a web security company.
The cybercriminal has evolved over the years. If we go back in time, the original cybercriminal was there for disruption. They wanted their 15 minutes of fame. They wanted to be famous about bringing down a big network. However, things have evolved and changed greatly. certainly where we as users have changed. We have so much information about ourselves. And a cyber criminal now really is organised crime. They're there to take money out of us and defraud us as IT users. So whilst the 15 minutes of fame cyber criminal still exists, predominantly now it's organised crime looking to profit out of malicious software.
About only 1 in 1,000 South African companies actually report a cyber attack. And then we can't quantify the frequency of these incidents, but how vulnerable is the South African business?
What we're seeing in Africa is more new PCs coming into the market than ever before. So we're having more new users. And new users mean they don't necessarily understand the risks. So instantly when they get their smartphone or their tablet or their PC, they start to go online, they have their Facebook pages, everyone loves Facebook, they have a couple of email accounts, online banking, and they're not so savvy where they don't understand the risks of this. So then the cyber criminal looks at the growth rates of new PCs, and that's where Africa as a continent is so exciting to them, and that's where we'll see them, we're seeing already, start to target Africa in a much more detailed way than one size fits all.
What we're hearing is that employees are fast becoming the weakest link, because companies already have protection software, they have network protection devices in place. So the employee is considered the weakest link. Is that so?
I think so. And what we're seeing with the growth of the smartphone, for the first time this year, smartphones will outsell PCs, like I say, for the first time ever. 420 to 425 million smartphones will be sold this year. And what we have to start thinking about smartphones is not just a phone, it's a mini computer. So where IT organizations, IT departments within organizations will be sitting there concentrating on protecting the data center and protecting the user's PC or laptop or tablet. But with the smartphone, we can go out and we can access all our social networking pages. We can do our online banking. We are free out there in the world. So this is another device. So I go back to the cyber criminals seeing the same data about smartphone growth, and they go, this is a way for us to get into the smartphone, get all of your contact details out, but also as a way of getting into your corporate network. So all of the, what we're saying, AVG is saying to all of their corporate customers at the moment, stop thinking about devices, thinking about protecting individuals.
So what can companies, what can individuals, what can governments do in Africa to manage the situation, if they can win it?
They have to have up-to-date software on their data centers as well as their users. Start to think about users, again I repeat it, not just as a person on a laptop, but all of their devices. And start to create some rules within a company that says, you know, the biggest nightmare for an IT department is its employees, because we bring in software, we bring in devices. So start to create policies. Start to drive down policies about passwords. We're still all very, very lazy about passwords, but get savvy, educate all the employees. Talk to them about the risks of what would happen if they bring a virus into their company's network. So it's a little bit about going back to basics, but start thinking about you, not your device. That's the #1 rule.